Bloomberg Audio Studios. Podcasts, radio, news. Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Beijing urges local companies to avoid using Nvidia's H20 processors.
Plus, Elon Musk accuses Apple of favoring OpenAI above other AI companies in its App Store.
And stablecoin issuer Circle's revenue jumped 53% just 2 months after a splashy public debut. We'll discuss with the CEO.
But first, we return to the public markets, not just Circle, but the broader indices. They're at record highs. The Nasdaq 100, the Nasdaq, the S&P 500 were up 0.6%. It's been volatile trade as we digest the CPI number. All importantly, consumer price inflation coming in where the market anticipated. It looks as though the market thinks still the Fed has room to cut, Ed, but you are looking once again at the semiconductor story.
Yeah, Nvidia and AMD are off session lows. What happened this morning was the information reported that China's internet regulator had demanded that specific companies, including Alibaba and Tencent, cancel orders for H20. There's a lot to unpack there because in particular it is different from what Bloomberg reported. Bloomberg reported that Chinese authorities had urged various Chinese entities to hold off on ordering the technology. There's a difference of severity there, hot on the heels of a big story 24 hours ago where the president cut a deal with Nvidia and AMD to do a revenue split on AI accelerator sales in China. Let's get out to DC, Caro.
Yeah, let's get that White House perspective. Josh Wingrove is in the bowels of the White House as we speak, and we thank you for joining us, Josh. Just what do you think the tete-a-tete means here for the White House to see China's response in terms of pushing back against H20s?
Yeah, thank you for having me. This is the glamour of the press booth here at the White House. So just in case you think it's all sunshine and lollipops down here, you know, we're in it. We're in it. We're surviving. This is sort of, I guess, a tightening of the screws and this sort of back and forth between them, right? This question of will the H20s go at all, and then the report that Trump saying he asked for a 20% cut, and then Nvidia and him settled at 15%. And now this China saying, well, maybe we don't want those chips in the first place. And, you know, there's a few questions swirling here. One of those is, will the administration try to do this on other products, whether chips or otherwise, try to, you know, leverage export controls for new government revenues? It's unclear. They've been silent about it. It sure seems like this is the model that Trump would like. So, you know, this sort of seems like it would be on the table for things, you know, where the market would bear it. Another one is, of course, whether companies do actually heed what we're reporting is the warning from China, or the request, I guess, from China to avoid using these chips. The big question is what would ultimately the demand fall to if Chinese demand were to fall on this. And then there's a question of, well, what about the other chips, right? Trump mused about even selling more advanced chips, but a pared down version of them. No one really knows what that would look like. Anyway, might be open to that. Again, it would seem with some sort of cut. But a lot of analysts have said, well, if you're just charging, you know, premiums to send even more advanced stuff to other nations, I mean, that opens the door to all kinds of things, including like, you know, military sales or what have you. And so we're really in uncharted territory here right now in a lot of ways on this, but the bottom line is Trump likes the idea of these chips moving, in part because he's calling them obsolete. Of course, they're not quite obsolete, but so long as the U.S. government is getting a cut. Fine print, we don't know who actually is getting the cut. We don't know if this is going to general revenue or if the Commerce Department would steer this somewhere. It's all so unclear.
I think what the president was alluding to was Jensen Huang coming to a meeting with him to talk about a lower power version of Blackwell, which the market has speculated is called B30, and Nvidia has never said anything about. The analyst community looked at this Chinese reaction and said it's a tactic in the broader US trade negotiations. You've had a busy 24 hours because Intel's CEO, Lip-Bu Tan, also came to see the president. What's the latest there?
Yeah, they had their meeting here yesterday. Trump sometimes calls in reporters to these meetings that didn't happen yesterday. You know, there's been a lot of to and fro between them over whether that is sort of a soured relationship and whether Trump would put pressure for a swap of leadership there. There've been sort of positive signs out of it. Trump saying that they had a good meeting and sort of teeing up future meetings with his cabinet. And so the pressure seems to be off a little bit on that one for now, but we all know the president can be mercurial on these things. And so it's sort of a time will tell situation. There's a briefing here in a couple of hours to make it a little more detail on what they spoke of in that meeting. Trump has been taking sort of a lot of these, but his focus seems to be elsewhere today. He's teeing off on Goldman and threatening to sue Jay Powell. So it's a big day here at Bloomberg, for when it comes to the White House stuff. But right now, I think it seems like they're out of the woods a little bit, if you're Intel.
Josh Wingrove, we thank you for the perspective, at least on the tech executives. Let's deep dive a little bit more with an investor take on the global chip sector. Scott Ladner's here in the studio, Horizon Investments CIO. How do you navigate the president's impact on certain companies, whether it's about them doing business or who leads their businesses?
Well, I mean, this is the question of the day today, at least, having to do with Trump. And I think, Caroline, kind of what we have to understand is that Trump at his heart is a commercial guy. And so, what we're trying to figure out is like, what are the rules of the game that are acceptable to him in order to actually run our businesses and in order to sort of move forward. And so I think sort of the discovery process of figuring out like, what are the deals that are acceptable to him in terms of like, what do I have to give in order to let him sort of leave us alone to some extent to actually run our businesses. That discovery process, I think, is what the economy is really, and specifically the chip makers are really sort of going through right now. And I think they're getting to a place that they understand the rules of the game. So that's actually an acceptable landing spot, I think.
But the game of ping pong for the likes of Lisa Su and indeed of Jensen Huang has been hard when it's accessing China. And already maybe we see the ramifications of that pullback of their pared down chips. The fact that China's saying we don't even want them. Is that a concern for you, the lack of access, the lack of demand potentially in the longer term for sophisticated chips from China?
Look, I think it has to be. And so because this is like one of, if not the largest chip market in the world that they're having to sort of jump through hoops in order to actually be able to access and cut special deals in order to be able to access. And so that's, again, once we can finally understand what the rules of the game are going to end up being for how do we sell chips into this very large Chinese market, the better off we're going to be. But in the meantime, these CEOs are having to go around and try to cut these deals and try to understand, what is it that I'd actually need to do outside of just running my business and outside of doing all the innovation that I have to do in order to make good chips. Okay, what do I have to do on the political front to actually access, the second largest chip market in the world?
Scott, from the CIO's perspective, the President of the United States cutting an ad hoc deal where they get a share of revenue in exchange for an export license. Did you see that coming? And do you expect it to be replicated to other parts of the technology industry? And how do you model for it?
Well, Ed, I'm not sure that you do really model for this. I think that we're in a more of a read and react situation with Trump, and that's frankly how you have to deal with Trump on some of these policies. I mean, it is not a forecasting exercise; it's a read and react exercise. And so, I think that's just how we have to sort of think about it.
Scott, what does read and react exercise look like at Horizon Investments? What did it look like this morning in the last 24 hours?
Well, I mean, I think it means to some extent like figuring out are the things that we're facing in terms of some of these hurdles that are new as of the last 24 hours, are these really game changers for some of the medium and the longer term themes that we think are going to really be important in terms of what's driving some of these names and what's driving some of this productivity shifts? We don't think they are. And again, I think because we understand that he's a commercial guy and he wants to cut deals. Like, he wants deals to get done. He doesn't want deals not to get done. He wants deals to get done. And so if that is sort of your starting place, and these deals are somewhat acceptable, and we understand what they're going to look like, it doesn't really change the medium-term look, as this is the most important technology in a generation, and you got to be on board with it.
I'll jump in here and just think about, you've got to be on board, you've got to read and react. Does this change the ultimate tailwinds of generative AI from your perspective for names like AMD, for names like Nvidia more broadly? The valuations that we've garnered have been a global opportunity. But if we cut off China, if China moves away and they want to go domestic, does that impact your desire to get into these names?
It does on the margin, sure. I mean, I don't know that it has to. It sort of has to. It has to on the margin. But it does. It doesn't really change the longer-term story. We haven't seen anything today or the news cycle of the last 24 hours out of some of these actions that really changed what we think about that medium term and about some of these access issues. Is it going to make it more expensive? Yes. Is it make it more complicated? Of course. But it doesn't really change some of the more fundamental narrative in terms of do we want to be in these names? Absolutely, we do.
Do you want to be an Intel?
Intel's a little bit more complicated because we don't know that they've got leadership in place that can get them to that next stage and get them into the right types of chips. It's not just can you produce chips, can you produce the right types? And that's the big question overhanging Intel right now.
Scott, could we go a little deeper on that? I guess what you're hinting at is that Lip Bhutan's visit to the White House doesn't necessarily solve the tension that's there based on the president's post last week.
Well, look, Trump doesn't like to be wrong, or doesn't like to admit that he's wrong. And so if he calls for somebody to be fired, and it's a pretty high hurdle to get him to back off of something like that. But I'm not saying it's impossible. But in terms of the future leadership at Intel, it would be a lot easier for Intel to make a change like that, rather than to try to sort of fight against the stream, sort of against the river that is the Trump truth posts. And so that being said, I don't know what they're going to end up doing, but it does make things infinitely more complicated in an already infinitely complicated situation for Intel from a corporate structuring standpoint and from an innovation standpoint that the market is already obviously questioning.
Scott Ladner of Horizon Investments, thank you very much. Now, coming up on Bloomberg Tech, Nandi Tengler joins us to talk through some more on Nvidia, on China, but also Apple, now in the crosshairs of Elon Musk and xAI. That's coming up next. This is Bloomberg Tech. Elon Musk lashed out against Apple's App Store practices in a post late on Monday, accusing the iPhone maker of favoring OpenAI, saying Apple makes it impossible for anyone other than OpenAI to reach the top of the App Store charts. Bloomberg's Kurt Wagner joins us now for more. In fact, it was several posts on X throughout the time I went to bed last night here in London and the time I woke up. In aggregate, what's at the core of Musk's complaint?
Yeah, he is claiming antitrust behavior by Apple, saying that the company is, you point out, Ed, is favoring OpenAI. It's putting OpenAI in more prominent positions on the App Store, artificially, in his mind, putting them higher on rankings lists. Now, of course, some of those rankings lists are editorially curated by Apple employees. That's been the case for years, and it's always been a challenge for developers to try and get onto those lists, to try and get that sort of publicity that way. But again, a lot of this is also just based on rankings, which apps are downloaded the most frequently. And in some cases, OpenAI and ChatGPT are the top of those lists.
And you use X's own community notes. And they point out that it hasn't always been OpenAI at the top of the pile when it comes to other generative AI chatbots. Others have eclipsed it, even since the OpenAI and Apple deal, Kurt. But also Sam Altman weighed in a little bit too, right?
He did. He had some sharp words for Elon Musk, pointing out that it was sort of rich for Elon Musk to complain about this when, in Sam Altman's words, he's putting his thumb on the scale on the X algorithm, right? He's changing the things that you can see on X to reflect Elon's view of the world or Elon's favorite topics. And so that was sort of the throwback that Altman had for Musk there. And the two of them obviously have a long history, Caroline, as we've talked about repeatedly on the show. So for those who have followed, this is sort of just the latest in that saga.
So Apple has not responded to requests for comment on this, but like you, I went through all the documents available and Apple explains the methodology behind the rankings. But Elon Musk is also complaining that OpenAI and Apple are technology partners, and for that reason, they have a bias toward them. Could you explain that bit?
Yeah, so last year at WWDC, Apple announced a partnership with ChatGPT that it was going to integrate some of OpenAI's technology into the iPhone. And so he's claiming, and this is the reason in Elon Musk's mind that OpenAI is sort of getting this favorable treatment. Now, I have to point out that Elon Musk is not the first person to kind of go after Apple over the years for making things difficult on developers they might compete with, right? Facebook and Mark Zuckerberg are the top of the list in terms of banging the drum about Apple being anti-competitive over the last several years with the App Store fees that they take and other things. So Elon Musk is not alone in sort of his view on this. Now, whether that view is simply formed in any actual real fact or just opinion, I think is the challenge here. And clearly he's very upset with OpenAI's relationship right now with Apple.
Okay, Bloomberg's Kurt Wagner, and as Kurt said, Elon Musk has threatened Apple with litigation in the antitrust context. We'll bring more as we get it. Let's bring in Apple and Tesla investor to talk a bit more about it. Nancy Tengler, CEO and CIO for Laffer Tengler Investments. And, you know, like you have exposure to Apple. I think you've added to it recently. You know the Tesla story, but also Elon Inc. story really well when it comes to AI. How concerned are you about this situation with Elon Musk, essentially going after Apple?
Hi, Ed. Listen, I think everybody's acting to script. So, Elon will describe himself as someone who's programmed for war. This is one way for him to gain shelf space, is to raise awareness, to claim foul, and then hopefully get some concessions from Apple. In terms of the effect on Apple, I don't think it's going to be long-standing. I think there will be some sort of behind-the-scenes handshake, but it always matters where you get into these stocks. And so we were adding to Tesla at 240 during the tariff tantrums. At 333, I'm pretty happy with the holdings. And then we added to Apple last Tuesday. That was just sheer luck. And, we picked it off at 202. And we can wait around for things to right size. But I don't think this is the end of the App Store. And I don't think it's going to be a big headache. He's filed a lot of lawsuits that have gone into the Elon Musk lawsuit black hole. So I think we'll get some resolution.
He keeps lawyers busy, that's for sure. We're up 1.2% if you're looking at Apple's share price. So no one too worried, Nancy. But just dovetail a little bit of the AI opportunity within Tesla and why you're not adding to it at the moment, because there's been much made about whether they'd invest more broadly in XAI itself. There's a lot of cross-pollination that goes on.
Yeah, I think the cross-pollination would be good. I'd love to see Tesla absorb XAI. I use Grok religiously, and I just happen to think it's the best solution. I'd love to see more people utilize it and see the company continue to go deeper into the AI portions of their business and have it benefit Tesla shareholders. We'll see when we get the shareholder vote where the shareholders come down in terms of investing further. But I like the ecosystem. We're building out a strategy that focuses on all these new frontier, opportunities: quantum, nuclear, robotics, Gen AI, and in that we will have front and center. One of our largest holdings will be Tesla.
Nancy, I broke the story last week that Elon Musk requested that the Dojo project be shut down, and he confirmed it on Sunday in a post on X. And I reported today a lot of that engineering talent's been reassigned across their other chip efforts. How central was Dojo to your thesis with Tesla? Did you pay attention to that one?
Yeah, and congrats on the story, Ed. Yes and no. I mean, it was so nascent in its origins that we were watching it. We are certainly focused on quantum computing and the elements that will drive it, but we didn't have it in our expectations for future earnings growth. And I think that's a lot of what you have to do with Tesla and Elon. He's always thinking, trying, and then restarting. And so, we wait to see what's sustainable and where we think the direction of the firm is going. And, Caroline asked mentioned we haven't added to it recently. I mean, we will again. It's a pretty significant holding in our growth strategy. Not a member of our 12 best ideas because I can't handle the Elon volatility in the 12 best ideas portfolio. But right. I think they'll figure it out. They'll either partner, as it looks like they're going to, or they'll restart.
I love going back to that frontier fundamental analysis you're doing as well, Nancy, when you're looking at the opportunities in generative AI, whether it's quantum, some of the more forward-thinking things. In the here and now, when you own Nvidia, and I know you've been exiting AMD, but when you're thinking about what the administration means for the future business, what China's own demand for chips means for the future business, how are you thinking about that story?
Yeah, this story is a little bit complicated, and you're probably going to get the cranky side of me. I think the precedent set by an administration that, is pay for playing is unseemly at best. I get why Jensen made the deal. I would have too. But for the president to say at a press conference, I told them you're going to have to pay us something for this. That may have gone on behind the scenes. We probably had it in the last administration with Meta, but it was different, and I just don't think it's the way we want to conduct business in the United States. That said, we had written off China, investors had, not so very long ago. The company took, Nvidia that is, took an $8 billion charge. And then, the Middle East opened up. So I don't think this is going to be the death knell. I think China did exactly what you would have expected them to do, come out, in response to Jensen saying, keep China hooked on our products. They're going to come out and say, no, we don't need your products. So it'll settle somewhere in the middle, and we'll get incremental revenues and a little hit to margins.
Well, very quickly, China responded in some form. How much do you think they're trying to protect their own domestic chip names? Just very quick.
I think they are, of course, Ed, and I also think they're trying to get a better deal always out of the U.S. So stay tuned. I think we'll end up somewhere again in the middle.
Nancy Tengler of Laffer Tengler Investments, giving us your cranky side, which we appreciate. Thank you very much. Now, coming up, GM looks to resurrect its autonomous ambitions. That story and so much more next. This is Bloomberg Tech.
Time now for Talking Tech, and first up, GM is looking to restart development of new driverless cars. Now, according to sources, it's looking to lure back ex-employees of its former autonomous cruise operations. The project is said to be focused on autonomous vehicles for personal use, with the ultimate goal being a car that can drive with no one at the wheel. Plus, GitHub CEO Thomas Dohnke is stepping down. Now, the coding platform executive is set to remain through the end of the year and will leave to become a founder. GitHub, which was acquired by Microsoft back in 2018, will become part of the company's core AI team. And ESPN is hoping to lure back customers with a new app. Now, the service will cost $30 a month, and it'll include live games, fantasy sports, highlights, original programming. Look, this marks the first time ESPN's complete sports lineup will be available to viewers without cable or satellite subscription, Ed.
All right, coming up, Circle CEO Jeremy Allaire joins us to talk about the company's first earnings since going public. Markets reacting pretty positively to those results. We're going to have a lot more on that next. I still feel like the story of the day is one of volatility in those two chip names. Nvidia is modestly higher now, AMD up 0.8%, but there was an information report that basically said China has ordered tech companies to stop ordering chips from those US names, different to Bloomberg saying that regulators and authorities had urged those tech companies in China to stop placing the orders. The stocks bounced around all over the place. There's so much news flow, and we will have more on it throughout this hour. From London this week and also New York City, that's what your index level looks like. This is Bloomberg Tech. Welcome back to Bloomberg Tech. Markets have just closed in Europe and in London, where I'm sat, and therefore I'm looking at these three names. Across Europe, software names have been under pressure today. The concern for these software names is that AI is going to kill software. Such an interesting concept. In fact, there is a note from RBC Capital Markets analyst Matthew Hedberg, which says, quote, there is, from a valuation perspective, death of software due to AI. These are companies that in Europe are seeing like really strong revenue growth, but the idea is that AI elsewhere just renders their software offerings obsolete. It's not something we've talked about much, particularly from this geography, Caro, but serious declines, and in Europe, a lot of weakness in those software names today. And this is something a lot of people have clicked on this Tuesday, which also took me a bit by surprise.
Significant moves. Look, Ed, let's pivot back to another stock that's moving on the higher side this morning as well. We're focusing in on the stablecoin network operator, up 6.5%, that is Circle. The company reporting second quarter revenue jumping 53%, $658 million. Now, it's the issue of stablecoins, and it's its first earnings release since it went public back in June. Circle CEO Jeremy Allaire joins us now. Jeremy, just that bump in revenue, we know how ultimately you make a lot of your money, and that comes from treasuries, it comes from other yielding assets that you're holding versus USDC. What about the other revenue growth that you want to see? How are you thinking about that pipeline?
Well, a couple quick things. I think first, that bump in revenue is driven by growth. We saw 90% year-over-year growth in USDC in circulation on our network, which is significant. And that growth is obviously a driver. Even where we see rates decline, that growth is really driving our overall top-line revenue growth. We're also seeing growth in our other revenue. And so, again, as you think about Circle and our business, we have our stablecoin network. We have money that flows on that network, and we're adding new services, subscriptions and services fees, transaction fees for a wide array of different things. We're building an application layer through Circle Payments Network, and actually we just announced a new blockchain network, Arc, today. And so those also grew 250% year on year, and obviously have a slightly different margin profile, a higher margin profile. So that actually added a couple hundred basis points to our margins, which obviously translated as well on the aggregate into our EBITDA growth, adjusted EBITDA growth of 52% with a 50% kind of adjusted EBITDA margin.
Let's just dive more into the new products, into Arc that you referenced, into your payments network. How close a competition does it put you in with players like Stripe out there already, for example? How does it continue to make you market neutral when it comes to an infrastructure player?
Well, when we think about Circle, we think about ourselves as an internet platform and network utility company. And we want to make sure that we can provide the full stack that's needed for financial institutions and leading enterprises around the world to take advantage of stablecoin finance. And Arc, as a blockchain network, is purpose-built for stablecoin finance. The transaction fees are paid in USDC and potentially other stablecoins. The network infrastructure is designed around what's called deterministic settlement finality. That's key. Bank regulators want to know that transactions and settlement are final. It's a key characteristic of a prudential grade, of financial infrastructure. So we're building this, very much in the view of what's coming. All of these major institutions that now want to build on stablecoins, really making sure that we have the right infrastructure at play. But at the same time, broad interoperability for our stablecoin network. We're interoperable across 24 different blockchain networks. We're fundamental dollar liquidity on those networks, and we're going to continue to do that. And in fact, Arc is going to become a very powerful way to provide even greater support for liquidity and interoperability on these networks.
I think, Jeremy, there's a lot of interest in the other revenues opportunity with you to get a better understanding of the core business. I have the Bloomberg story about your earnings report in front of me, and the AI summary is the majority of Circle's revenue comes from US Treasuries and other yield-bearing instruments that support the value of USDC tokens. Just to the uninitiated or the layman, could you just explain the basics of that?
Yeah, so Circle operates the largest regulated stablecoin network in the world, and that network reaches over 600 million people who can reach in their pocket and access and use USDC. There's tens of thousands of products and services that are integrated to the network that provide ways for people to store and make transactions and payments or investments using USDC. So we have this really large network, and there's demand for these digital dollars, and those digital dollars, are essentially, purchased using existing money and then issued as digital currency and are in free circulation on the internet. And so that money stock on the network that's moving around, and we also noted we saw tremendous growth in the amount of transactions on the network, $6 trillion of transactions in Q2, and seeing that accelerate into Q3 as well. So we have this very high velocity, high transaction money on the network, and we monetize that through the reserve returns. And so, what we really focused on this part of the business is growing that money stock. And there are a lot of different views as to how fast stablecoin money supply is going to grow. There's an optimistic view of a 90% CAGR for the next 5 years. There's the lowest view is a 25% CAGR over several years. And so we tend to be on the more conservative side when we think about that from a kind of outlook perspective. But, we grew 90% year over year. That obviously drives top line as well. And year to date, we've grown 49% 39% as of August 10th, which is very strong growth, and that again driving and supporting that top line. While we also build out all of these new products with new revenue streams in subscriptions and services and in transaction fees, and so we're continuing to build those out as well.
You go through going public, you go through your first quarter as a public company, and the first thing the market's going to ask you is about inorganic growth. What's your M&A strategy, Jeremy?
I mean, look, we are a technology company. We're very focused on software-powered innovation. That's really the heritage, my heritage and the rest. And so virtually everything that we've done here has been organic. We love building software and software technology. And we have done acquisitions. We've actually done 3 acquisitions this year. One was a product and technology that's allowed us to accelerate our entry into the yield-bearing token space with USYC. We had some big news with that in the quarter as well. And then 2, our teams and intellectual property acquisitions, both of which supported our efforts to launch Arc. And so where we find great intellectual property or technology and great people, we see that as a very natural thing to do to kind of augment and bring speed and velocity to our product development initiatives. But we're not really here to go do huge acquisitions and try and roll things up. That's not really our approach. So we'll look at things and of course continue to make acquisitions where it makes sense. But this is not an M&A play in the sense that people understand.
Jeremy Allaire, taking us across the business. We thank you, hot on the heels of your earnings, the Circle CEO. Now, we just want to return to some breaking news more broadly about financial markets, not just stable coins, but about data, in particular labor statistics. Bloomberg International Economics Policy Editor Michael McKee joins us now on some reporting done by Fox about, the person who's going to be potentially taking over labor statistics for the United States and his view on how often they should be. Just break down the news for us.
Well, it's a kind of a strange situation because he made these comments before the president announced that he was going to nominate him. He did an interview with Fox, and apparently they didn't run it until now, but he said maybe, given the poor jobs report that we had, maybe we should suspend the jobs report each month until we can get the numbers fixed. It's the president who thinks that the numbers are wrong, not the statisticians. And that, I'm not sure why you would do that, right? Because this would mean that Wall Street would have nothing to trade on in terms of jobs reports, and I would think that would not go over well.
Michael McKee, if you're not sure, then I'm worried because I and hundreds of thousands rely on you for economic data. The jobs print is key to what we do when it comes out. Why does the market rely on it so much?
It's a great signal of what's happening in the economy because when people have jobs, they spend money. When people are losing jobs, they don't spend money. And if people are spending money, then companies hire more people and profits go up. So it's sort of the linchpin indicator that the Fed uses and a lot of people on Wall Street use to tell us in general how the economy is going. And it's the data are delayed, as we know, and they get revised, but it is the best kind of numbers that we have on a regular basis, on a monthly basis. So the idea of suspending it, I think, would get no traction at all. I'm not sure that the BLS commissioner would have that ability anyway.
I'm just riffing here a little bit, Caro, but, in terms of manufacturing data, I've been thinking a lot about whether humanoid robots are coming or not. Yes. Bloomberg's Michael McKee with some interesting news. We have some breaking news crossing the Bloomberg terminal. Perplexity says that they've made an unsolicited bid to Google today, offering $34.5 billion to purchase its Chrome browser. I'm going to repeat that. Perplexity says it sent an unsolicited bid to Google this Tuesday, $34.5 billion for the Google Chrome browser. That's a significant and interesting piece of news. We're going to get the shares of Alphabet, the parent of Google, up very soon. And we're going to talk to Bloomberg's Seth Figerman, who's one of our technology and AI editors out of New York City. The details with the stock of Alphabet now up a percentage point, please, Seth.
Yeah, it's an eye-popping offer, as you pointed out, Ed. It's also very much a long-shot bid. There's a lot of caveats here. Google has not actually put Chrome up for sale, as far as we know. It's largely in response to the U.S. government wanting a judge to order Google to sell off Chrome. The judge has not actually put out a ruling on that yet. And then on the offer itself, Perplexity is offering $34.5 billion. That's nearly double what Perplexity's valued at, and far more than the more than $1 billion that Perplexity has raised to date. Perplexity is saying that they have investment funds that are willing to support this bid in full, but again, this is a long shot offer as of now.
They've made long shot offers before,
Yes.
whether or not they've been as formal as this one, but they threw their name in the ring when it came to TikTok, I remember. But the US part of TikTok, as numbers aside, the browser bit, well, they've already been building their own browser, so why make this purchase, and ultimately how would it beef up their offering and take away from that of Google's?
Yeah, it's a great question. They have been working on a browser called Comet, but it's one thing to try to build your own browser from scratch, and another to acquire a browser that reaches billions of people around the world. The idea here seems to be that they want to inject their AI agent capabilities into the interface that we all use on the web every single day and get in front of far more people. This would give them a major head start on that front, but again, this is a lot of money that we don't think they currently have.
Yeah, I mean, I'm reading the story, and you'll forgive me, Seth, I'm just reading it in real time. Perplexity says it's going to invest $3 billion over the next 2 years in Chrome and Chromium, right, which is the underlying open source coding that supports a number of browsers, and also that they're going to extend a substantial offer to Chrome talent. I mean, I'll leave some of the details to you, but what do we make of that? What else are we reporting?
Yeah, I mean, again, I think they're trying to show that they'll be a good steward for a platform that's used by billions of people around the world while continuing to move forward with their own venture in injecting AI capabilities into key internet functionality.
Well, we're expecting that ruling from Judge Amit Mehta in coming days on the remedies that they want to see to prevent what it sees as Alphabet and Google being some sort of monopoly when it comes to search in the United States. Bloomberg's Seth Fiegelman on the breakdown of Perplexity's offer for Google Chrome. Let's just return to the overarching geopolitical story of US and China right now. We've been talking a lot about how China is urging its domestic firms, AI firms, not to use Nvidia's H20 chips. This after the US agreed to revenue split for allowing AI semiconductors from Nvidia, from AMD, to re-enter China. Now, Bloomberg opinion columnist Dave Lee wrote about this yesterday, about the decision by the White House, and also what it would cost the US in terms of an AI advantage. The story moves on continually. But what was so striking about your story was, look, if there's a 15% cut taken by the US government to allow AMD and Nvidia to sell into China, the winners are Nvidia, maybe less so now, but China. Why would China, clearly seeming to push ahead in terms of its own AI semiconductor offerings?
Well, one of the things the H20 chip would allow more quickly is scale, right? I mean, one of the things this chip is good at compared to what China's capabilities are now is it can do more inference, so it can run the applications that AI is built for. That's something that we don't think domestically they could catch up on for a couple of years. And so, look, this doesn't change China's aggression in trying to build its own chips as quickly as possible. But what it does do is kind of fill the interim there to allow them to start integrating AI into all aspects of Chinese life, and therefore continue to make it a global player. Question is, and where the story has moved on since I wrote those words, is China now going to look to sort of almost stop that from happening in order to protect its domestic supply? How's it going to balance trying to make sure AI is used as much as it can in China, whilst making sure that its homegrown effort is still built upon as quickly as possible?
So, Dave, on your piece, and I appreciate a lot has changed actually in 24 hours. Just take mine and Caro's word for it. It's been a nightmare doing this for the last 24 hours. But your final point is that there are two winners here, Nvidia and China. But you don't say the United States is a winner, if you get what I mean. Trump is supposed to be the deal maker, but your conclusion seems to be actually good deal for Nvidia, but America in aggregate. That's what I want to get from you.
I mean, look, if the concern over exporting these chips existed this time last week, I don't think the 15% revenue cut changes that calculation. It doesn't seem like a good enough change to warrant what's essentially quite a dramatic change in national security policy. That would be my sort of overarching question here on why the US would go forward with this. I guess guess one of the dynamics that we're just starting to learn now is what this might mean for other parts of the trade deal between the US and China. We're hearing about rare earth metals being a concern. There's other types of chips that could be used as leverage as well. I mean, look, this is becoming a hugely complex piece of negotiation between the two countries. I worry that China has a position now of sort of saying to Nvidia, well, look, you might have got your permission from your masters over there in the US, but we also hold many cards as well. And unless we get more of what we want in these trade deals, then we may not allow the sale of these chips in the country. And look, for Nvidia, China is a very, very important part of its business. It's billions of dollars revenue, could be billions of dollars more. They had to write off billions of dollars when the restrictions on the H20 were going to put in place. So I think it really matters to Nvidia to please both countries, and that to me just seems incredibly difficult at this point.
Bloomberg Opinions, Dave Lee. Did a good job. Thank you very much. Let's get more on what we can expect from China's policy response here. Amanda Shao is a director in the China practice of the Eurasia Group geopolitical risk consulting firm. And Dave raises a point of chronology. Back when we were stopping the flow of chips to China, it was America's national security concern about how China would use those chips in the military context. The development 24 hours later, after the president cut that deal, is China saying, we have national security concerns and we want to champion our own domestic names. Who has the upper hand in this negotiation?
Well, I think that for China, a lot of the signaling that it has been engaged in is largely performative. We know that the Chinese continue to lack the capabilities that the Nvidia H20 chips offer. And so to some degree, there will be strong demand from the Chinese for the use of the H20 chips. But of course, as was pointed out previously, the Chinese, of course, do want to continue to strengthen its domestic chips building capacity. And, included in that is really providing support to national champions like Huawei. But on the other hand, when we think about where China is headed, China also wants to be supporting national champions like DeepSeek. And of course, DeepSeek's AI models are run on NVIDIA chips. So I think for the Chinese, there are both sort of economic considerations, but there's also security ones. So I don't see the Chinese outright banning the use or purchase of H20 chips in the near term.
Interesting that the information reported that there was a sort of full-on stop being asked for the likes of ByteDance or the likes of Tencent. But for now, you're thinking that there wouldn't be some sort of ban because it'd implicate the users of chips. But what's so interesting is Cambricon Technologies and Huawei. Of course, we have seen a market impact of the idea that they'd support their homegrown talent. What else have we seen from the Chinese government to really foster the building of semiconductors that rival that of the H20?
Right. Well, the Chinese have really poured a lot of money into its effort to develop a homegrown, chip industry. And we know that this is very much in line with the top leaders' vision for the country, that Chinese development and rise to national rejuvenation, as the Chinese would put it. A key to that is technological development and being able to rival the U.S. In terms of technology and AI. So, the Chinese have really made very clear that this has been a priority and this will continue to be a priority in terms of its economic development. But nevertheless, the capabilities that they have at home remain short of what U.S. AI chips can provide.
Amanda, briefly, where they do have the power, an outsized power, is rare earths. Is that part of the bargaining chip, if at all?
Yeah, so we've seen that really the Chinese themselves have been, I think, a bit surprised by how potent of a weapon the rare earths controls have been in these trade negotiations. Yeah. Now, I think it's important to point out that the lifting of the sales of H20 chips on the part of the Trump administration does not seem to have been linked to some sort of deal or concession from the Chinese side. The Chinese, in fact, issued a statement saying that it was not made as part of the deal, to make clear really to an audience that they did not offer any concessions for this. But in terms of rare earths and its role in the larger U.S.-China trade negotiations, absolutely, it's been very important, I think, for the Chinese in realizing that they have this key piece of leverage, and I think for the Trump administration as well, in realizing that the U.S. will remain dependent on Chinese rare earths and rare earths processing technology.
Amanda Shao from the Eurasia Group, thank you very much for joining today. Coming up, bit of a pivot, Taylor Swift. It trends across the internet with a surprise album announcement. That's next. This is Bloomberg Tech.
So I wanted to show you something.
Okay, what do we got?
We got
a briefcase.
Yep.
Mint green with TS on it.
Yep.
What's in it?
This is my brand new album, The Life of a Showgirl. So I wanted to show you something.
Whoa. Swifties worldwide got a surprise from Taylor Swift, who announced her new album, The Life of a Showgirl, during a sneak peek of her appearance on the New Heights podcast with boyfriend Travis Kelce. For more on the power of podcasting and the astonishing sights before my eyes, Bloomberg's Lucas Shaw, who leads screen time coverage. This has dominated Google trending, by the way, and most other social platforms for most of the time I've been awake. This is big. Tell me more.
Could you sleep last night? Were you able to, or were you just so excited that you had to stay up thinking about Taylor Swift?
That was Elon Musk related. Let's stick with Taylor, please. Thanks.
I mean, look, she's the biggest pop star in the world. It's not even really close. She just wrapped her Eras tour, which is the best-selling concert in music industry history, less than a year ago. I think there was a lot of debate, speculation as to whether she would finally take a break, go away for a year or two, as some artists have been known to do, or if she would just keep going, because she's been on kind of this crazy treadmill over the last 5 or 6 years where it feels like she's got new music every year, if not more often than that. She just had that big tour, and here she is ready less than a year later with a new album that I'm sure will break all types of records. And I do think it's interesting that she did it on her boyfriend's podcast.
Yeah, so who wins here, Lucas? The podcast underlying owner, but also the music labels that she's affiliated with?
Well, that's actually a little bit of a complicated question, because her music is released by Republic Records, which is a division of Universal Music Group. It's the biggest owner of all these different music companies in the world. But from what we understand about her deal, she's definitely the big winner, right? She owns the ultimate copyright. She is the IP owner. Universal gets fees and revenue shares for releasing it, and so it's good for them. But it's not the same as when you have someone that you fully control and own.
Well, we'll see how this one unfolds, when we're going to be able to all access it. Lucas Shaw, we thank you very much coming live for us on the news. Meanwhile, that does it for this edition of Bloomberg Tech. Ed, you're not going to get any sleep tonight, maybe, whether it's Elon or whether it's Taylor.
Just like astonishing news flow, so much of it actually playing out on social media and the internet as well. There's a lot to recap. Check out the podcast. You know where to find it, on the Bloomberg terminal, as well as online on Apple, Spotify, and iHeart. From London, I should say, and New York City, this is Bloomberg Tech.